Good morning all, this is Marvin from StockMarketPlan.com with your stock market watch for August 29th, the Monday session. Let's just get right down into it here. This is the spiders, the SPY. The spiders, symbol SPY, represent the S&P 500 movement, and this is what you're looking at right now, okay? And here's the big drop where I sold off way up here. Watch this thing come all the way down, and now it's trying to build a base and go further up. I can now draw this trend line here, okay, from the bottom of August 9th to the bottom of August 22nd and 23rd. So we've got a trend going on here, and also I can also draw this line from the top of the day range of July 25th to top of the day range of August 25th. There is a trend line here. So, you know, we squeezed in. I talked about the market way back here. I was talking about the market now looking to trade sideways, set itself up to go to a higher level. And that is exactly what we've seen here. Okay, the market again came down crashing. Now it's kind of again wedging up, okay? And the volume again, I mean, the pattern keeps on coming. Volume is shallow, okay, dries up, and then we get to the top and we come down again, retest lows. Look at the volume, okay, guys. I mean, it's so repetitive, it's ridiculous. I mean, I'm just tired of talking about it, but it is what it is. That is what's actually going on. Now we starting to test here higher levels, and you know, this session on the 29th, look at the volume, lowest level since well, before we had the crash back here. So I mean, that's pretty low, so it is of concern. However, I always talk to you about price first, right? This first, price. And look what's going on here. We're breaking out not only through this trend line that I drew here, but also this trend line, okay? And that's from the high of, that's the old high on August 17th, okay? And if I zoom in over here just to show you what I mean, okay, we did close above that. Here's that line, closed above it. Okay, we closed at 121.36, and the high on that day was 121.43. Okay, on the 29th. All right, so we are breaking through to higher ground. Let me zoom back out here. Okay, we are breaking through to higher ground here, not only because of breakthrough through this trend line here, but also through this old high. The market can trend higher. It certainly can. Now, I am looking here. Here's the beauty of getting out over here. Okay, being all in cash. You watch this thing come all the way down, and you're all in cash. Now, I don't have to apply all my money back into this thing at one time. I want to let it prove itself to me. So what I'm going to do is probably at the close of the 30th, okay, I'm going to look at where the market closes. If it closes above this trend line right here, okay, so anywhere above 119.15, $119.15 on the spiders, I'm going to be starting to buy. I'm going to start buying on my long-term accounts. I'm going to start, you know, I'm sitting all cash there right now, so I'm going to start buying again 25%, as the market proves itself. So 25% here. I'm going to keep an eye on volume patterns, and depending on volume, how the volume looks, how the movements are relative to volume, so far they're very poor, very, very poor. Nothing has changed. However, again, I cannot discard price advances. You know, this can come in, sneak up, and then bust out. It's a familiar pattern. We've seen this type of action before in the last 6 to 8 months, and you know, it's not a pattern that I like to see as the market makes new advances. I like to see higher volume on the up days, guys. I can't reiterate that enough. Okay, it's just so poor. But again, not to sound like a broken record, price first. So I am going to move in back into equities 25%. Okay. And as the market keeps proving itself to me that, you know, again, through the volume patterns to the price patterns, I'll start moving back in more and more and more until eventually we're 100% equity. And I can do that because I've saved a bunch of money by being in cash throughout this whole nonsense right here. And it's 18-20%. I can move in a little bit and still be ahead of the guy that carried this thing all the way down. So that's the beauty of calling market tops, because now you can give this thing a chance, and I hope that it breaks out. You know, I'm a bull at heart. You know, that's the American way. I hope this thing gets going, and you know, better jobs and more jobs for people, and you know, the economy improves, and you know, so it's not that. However, through this action here, something is not right, and I was right when I called that back here, and eventually we had this, and I'm still sticking with that. However, price first, so I have to stick in 25% equity, and slowly but surely, as the market keeps proving itself, you know, I can afford now, because of being in cash through this whole thing, to piece in, what's called piecing in to position, okay? Averaging up versus averaging down, which is what the average investor in the US is taught to do, and that's a whole nother topic. But you know, as the market keeps proving itself, I'll allocate some more into this market. So this is again the S&P 500 through the SPYs, and this was Marvin with Stock Market Plan with your Stock Market Watch for August 29th. Good luck today. Again, I'm moving in 25% equity, 75% cash at the close of the 30th. You can find us on stockmarketplan.com. Make sure you get on the subscription list. It's free. You can subscribe to the feed. Anytime I do any of these videos, you can get them automatically on your email. And right now it is of the essence timing, because it's we're just in an uncharted waters. First of all, you know, these are levels that we haven't seen in quite some time. If I go back, okay, back in October. So anything that goes on at these levels is critical right now. The market really, there's a huge battle. Okay, so thanks for watching. Bye bye.